Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Snehi Shah. In the next half an hour, we'll take you through how the markets wrapped up and what can you expect in tomorrow's trading session. But first up, let's see how the markets closed, where the markets closed at. We closed at the day's high as far as Nifty is concerned. We closed up 0.5% on 24,880 levels. In fact, we did have that news also come in of the US courts blocking Donald Trump's tariffs. As they found that the president has overstepped his authority. On the back of that, we did see all the Asian markets were also trading up, and Nifty also closed at today's high. Nifty Bank also traded at the highest point. We were closed up 0.6% at 55,746 is thereabouts is where Nifty Banks also shut shop. We also had Nifty Metal that was shining away in trade today. In fact, it traded up from get-go. It was up 1.3% in trade on the back of the note that Jeffries came out with on the metal pack. So, the entire metal pack was in focus on the back of that. Wellcorp, JSW Steels, Hindustan Zinc, NMDC, they were all trading with upwards of 2.5% or so. Nifty Realty was another pack that was doing very, very well. Anant Raj, Prestige, DLF, they were all trading with gains of almost 3% in trade. So, Nifty Realty was another pack that was doing well. Nifty mid-cap was also a space that was doing well. That traded up 1% in trade. In fact, names like Cummins India, which was an earnings candidate on the back of the results and positive commentary coming in from the management, Cummins did well. That was up in a way 6.5%. BSE was up 2%. Aurobindo Pharma, Policy Bazaar, Coforge all traded up with gains of 2% from the mid-cap space. On the losing side, we had the FMCG and the banking pack that was trading in the red. In fact, the PSU banking pack was reeling under pressure today. Union Bank, Indian Bank, IOB, Bank of India, they were all trading with cuts of almost 1% in trade. So that's how largely the market was shaping up. If you look at the, India VIX also, that cooled off 8.8% today. So that's a major downtick today as far as India VIX is concerned. Advance decline ratio was tilted in the favor of advances as far as the day's close is concerned. But what were the other news flows that made the headlines, Snehi?
Well, you had the RBI's balance sheet numbers come out today, so that was another focus area where the market was keeping all its attention at today. RBI's balance sheet expanded by 8.2% in FY25, so that was looking good today from the RBI's front. OPEC Plus was in focus. Commodities were in focus on the back of this as well. OPEC Plus has held output levels till their July review, so it's steady as of now, and that's the call coming in from OPEC Plus. That's while we are talking about commodities, let's also throw some light on gold, because gold has hit over 1 week low on risk on sentiment. Remember, usually equities and gold has an inverse proportion relationship, so equities have been doing pretty okay India and globally. On the back of that, gold has seen a little bit of a cut coming in. The government has cracked down on airline dark patterns is something that we are understanding. Yesterday there was a meeting on dark patterns in consumption and aviation, and we have news from there as well. So all of these stocks were in focus, and of course some other stocks were in focus today on the back of earnings. The likes of Engineers India, that stock has done pretty well today. You had some other stocks that were also in focus on the back of earnings post market hours yesterday. For example, Natco Pharma, inline set of numbers coming in. These stocks have held on to their gains and have done very, very well in today's trading session. But where are we headed from here on? Let's bring on board Kunal Bothra, who's joining us in the studio to make sense of the move that we've seen in today's trading session. And Kunal, welcome to the show. Give us a sense of the recovery that we've seen after the second half of the day. That half we've seen a lot of recovery coming in. India VIX, that's one to talk about today. A very sharp cool off coming in over there as well. Help us make sense of the kind of moves we've seen today.
It's like the perfect icing on the cake. You had a very good series for the month of April and May. I think it's a good top up for the markets to end on a high for this May series. I think it's been a spectacular last two series for the index. So no surprises that the index has closed with a positive bias. But what today's move indicates is a classical breakout. We were looking at a major build-up of 24,700 and 800 range for the index for a good part of the day. I think we managed to break out of that 24,800 mark, and from there on we've seen the pace of rally for the index being on the much higher side. So this could probably be an indicator for the index to now start looking at a more trending upside. It was good to see many large cap names making a comeback in the second half of the day, especially in the last half an hour or so. So we'll need to see how the rollovers pan out for index, both the Nifty as well as for the Bank Nifty, as well as for stock specific, and especially the large cap names. If we manage to see a much more positive rollover built up, then I would believe that maybe the start of the June series could also be much more on the positive side, and something which I think we left off in the last 2 months with a much more positive bias. So the bias on the index remains on the bullish side, but I think once we see the rollovers data, that could add to the more, add to more confidence for the short-term traders.
All right, moving on, Kunal, now that you have mentioned that we need to look at the rollover data to get more confidence, but tell us, in this market where you're saying that it's an icing on the cake, are there any buy calls from your end?
Yeah, of course, you have to have buy calls only in this kind of a market. So two buy calls, the first one is by Coforge. That's an interesting name because, Coforge after quite some time is making a very strong comeback for itself, both in terms of price breakouts as well as in terms of relative strength. That's a much more important parameter which you look out for. So would suggest a buy with a target of 9,000. Stop loss could be kept at 8,500. And the second would be a buy in ICICI Bank. I would believe that the major part of the consolidation is now behind for the stock. And start the June series, I'm expecting the stock to break past above a series of major minor resistances. So 1,500 could be a near-term target for ICICI Bank. Stop loss could be kept at 1,440.
Okay, Coforge and ICICI Bank on Kunal's radar. Remember, we had positive news flow coming in on Coforge as well today, where they've launched 2 new Gen AI platforms. So that stock has done well. Kunal, on that note, we'll let you go. Thanks so much for joining us in the studio. But time now, while we are talking about technicals, let's also take it across to Shrishti, who's waiting by with 2 charts that she has spotted on the technical front and 2 stocks. Shrishti, take it away.
Well, yes, 2 counters, one on the breakout side and the other one on the breakdown side. Firstly, let's have a look at the breakout stock, and that is RBL Bank for you, because this counter has surpassed its resistance of 210 rupees in today's trading session. Remember that 210 was quite a hurdle for RBL Bank, consolidating and rather touching those levels for almost all days of the last week, and RBL Bank today managed to move above that. And not just that, a very interesting pattern that you will see is the continuous support of its 20-day moving average. While the stock continues its uptrend in a slow and staggered manner, the stock has been making a bit of a comeback there, and this is RBL Bank on the charts taking a support on its 20-day moving average. This is the first stock on the breakout side, but the other one is a breakdown stock, and that is Colgate-Palmolive. Though the numbers in terms of the earnings was not that impressive set, but in terms of the stock price as well, you will see that the stock has been under a bit of a pressure. This red candle, I remember, that was on the day of its earning reaction there, but post that, no significant recovery, and the stock has been taking support at its 2,480 or 90 odd levels, but now a breach of those levels is what we have seen. The stock is very well trading below its 20-day moving average, and a bit of a short build-up is also what we have seen. So these are the 2 stocks that we have seen, on one on the breakout side and the other one on the breakdown side. Back to you.
All right, Shrishti, thank you so much for taking the time out and joining us with the charts. But moving on to the word from the wise, Anand Shah, who's the CIO of PMS, AIF, ICICI Prudential AMC, says that the interest rate cuts might be a short-term negative for the banks. He also adds that the fundamental performance of the PSBs have improved. Let's go across and listen into what he had to say.
I think when we discuss banks, I think the only thing that comes up is obviously the interest rate cuts would be a short-term negative for the banks. But otherwise, banks remain the structural play in India. I think private sector banks within the entire banking basket will continue to gain some market share. It will be slow sometimes, it will be rapid at other times, but nevertheless, as a basket, we believe the large banks have an edge in terms of the size, scale, and their ability to invest in technology. I think they will nibble into the market share and to that extent grow a little faster than the banking industry. The fundamental performance of the banks has significantly improved, and it would be at a high in terms of new normals will be much higher than what it used to be in the past. And I think there is an opportunity to do bottom-up stock picking even within the state-owned banks.
Okay, that's the word coming in from Anand Shah, but let's move away from that and talk about RBI's balance sheet, because that has expanded by more than 8% in FY25 with a forex transaction gain of more than 1 lakh crore rupees, which partly explains the record dividend transfer to the government this time around. The central bank has also reiterated its inflation forecast of 4% for FY26, saying that the risks are evenly balanced. Ankur is joining us with the highlights of this report. Ankur.
Reserve Bank of India's balance sheet has grown by 8.3% to around 76 lakh crore this time. And where is this coming from? The domestic assets account for around 25% of this, whereas remaining 75% comes from foreign assets as well as gold reserves. But talking particularly about gold, those reserves have risen by 57 tons to around 880 metric ton this time. But important thing to note this time is value of gold. That has increased by a whopping 57% to 4.3 lakh crore this time. And why it has happened? It has happened because there is increase in price of gold. There is also rupee depreciation, which has helped Reserve Bank of India this time to gain whopping 57% value in gold to around 4.3 lakh crore. Apart from that, important thing to note this time is the transfer of dividend to government of 2.69 lakh crore, and forex transactions have also risen this time to around 1.1 lakh crore, which was amounting to 83,000 crore last year. Similarly, interest income from foreign assets has also increased to around 97,000 crore, which was around 65,000 crore earlier. Similarly, if you talk about expenditure, even that has risen, but not much, only by 7.2%, and expenditure increasing to 69,000 crore in FY25. So all in all, high interest payments, employee cost, and printing push is actually pushing the expenditure cost to 7.7%.
And after posting its Q4 results, we spoke with Shweta Arya, who's the Managing Director of Cummins India, on their guidance on the margins. Let's go across and listen into what she had to say.
We did have a good quarter in terms of all our segments performing well. There was, if you're comparing to the same quarter last year, there was a lot of pre-buy in the power gen segment. And that was not there because we have moved to CPCB 4 Plus fully. And that is what you saw in this quarter. Although if you will see at a full year perspective, our margin performance is pretty healthy. And this is a quarterly impact, but I would say that from a full year performance, the margin performance is as per our expectation. And we continue to put in efforts in terms of cost reduction and improving our products for the market. So we anticipate the margin performance to sustain. In the CPCB 4 Plus segment, definitely the competitive intensity has increased in the quarter. I spoke last quarter that all competition launched their products and there is intensity in the market. We have been able to hold on to our prices till now. But as any new technology product gets launched, it takes a few quarters for pricing to settle down. We do believe that another quarter or so it will take for pricing to completely settle down in the market.
That's the word coming in from management of Cummins India. That stock up almost 6.5% in today's trade. But let's move on and also listen in from Commander PR Hari, retired and CMD of GRSE. He aims to sustain the FY25 margins going ahead. He also expects that the order book of the company will cross 70,000 crores by the end of 2025. Let's go across and listen in.
On the whole, even the margins have been very encouraging during the last quarter. We should be able to maintain similar margins in the coming quarters too. Basically, I'm looking at the project execution and the major projects which are giving us revenue. There is a P17 Alpha project at a stage where maximum revenue accrual is expected. So I expect similar margins to be maintained in the coming times too. I expect by end of this financial year, our order book should be, right now it's 22,680, it should be 40,000+.
And while expecting good results in the future while de-risking the investment portfolio, GIC RE is all set to achieve its target for the next fiscal year. That's the word coming in from the CMD Ramaswamy Narayanan. Let's go across and listen in to what else he had to say.
Areas. One is property, and this is foreign property where, if you remember, in the first week of Jan, there was a Los Angeles wildfire. So basically, we got some losses from there, but we have also provided quite conservatively for this. We've actually provided about $150 million for this. Currently, I have received only about $38 million of advices from my business partners, not due to any losses, but more due to provisioning that we have done to ensure that. As you would appreciate, life is a long-tailed class. It goes on for very many years. So we have only made some provisions to ensure that in the later years we don't get any shocks due to losses coming in. So when the markets were down, we have actually bought more securities. So in that respect, our overall investment portfolio looks very good. Our current international book is about 25%, 75% is domestic, grown 10.72% this year.
Okay, so let's move on from management commentary then and also revisit all the stocks that were in focus today. Rabinder is joining us with a list of all the stocks in the spotlight. Rabinder, take it away.
United is focused in today's trading session where company reported Q4 number and company reported revenue at rupees 2,180 crore. We saw an uptick of more than 14% quarter-on-quarter basis, and net profit also saw a good uptick from 98 crore to 202 crore on a sequential basis. And if we talk about EBITDA margins, then EBITDA margins has increased from 8.9% to 14.5% on a quarter-on-quarter basis. Moving to next, Natco Pharma is also in focus on back of Q4 earning, where company reported revenue at rupees 1,221 crore. We saw an uptick of more than 14% year-on-year basis. And if we talk about net profit also saw an uptick of more than 5% year-on-year basis. Apart from this, Garden Reach Shipbuilding is also in focus, where management to ET now said that they expect to maintain margins at the current level, and they expect P-17 Bravo rupees 70,000 crore project for 7 ships from Indian Navy over the next 2 years. So back of this, Garden Reach Shipbuilder is also in focus. Apart from this, Prestige Estate is also in focus, where company said that they have completed 3 landmark projects in Mumbai, delivering over 800 units across 2.8 million square feet. And also Morgan Stanley has upgraded the stock to overweight from equal weight, and they have hiked target price to rupees 1700 from 1370. And lastly, we're talking about real estate sector, where Morgan Stanley has come out with a note on realty stocks, where they have on DLF they have upgraded the stock to overweight from equal weight, but they have cut target price to rupees 900 from 910. And on Godrej Property they have downgraded to equal weight from overweight and cut target price to rupees 2400 from 3400. And lastly, on Oberoi they have maintained the equal weight rating, but they have cut target price to rupees 1700 from 2060. So back of this Morgan Stanley note, real estate stock is also focused in today's trading session.
All right, moving on then, these were the counters that were in focus on the back of that. But let's go across and see what TK Ramachandran had to say. He's a shipping secretary. He discussed the potential of shipbuilding industry. He also said that the shipbuilding in India is still at a very nascent stage, but the growth for the sector is likely to sustain going forward. Let's go across and listen in.
The overall growth is good, and we expect the momentum to continue, if only because apart from the economic growth, the logistics costs have to reduce, which means there is a requirement for more ports, and the reduction in logistics costs will have an impact on the goods that are brought in or taken out. So we think that overall the sector is going to do very well. I think the outlook for the Northeast is very good, and the Far East policy of the government is also helping the region to grow, and this is leading to an increase in the cargo. Shipbuilding is a nascent industry in India. 1%, we just produce 1% of the ships in the world. We own 1% of the ships in the world. We do not have a financing insurance ecosystem. We do not flag a large number of ships in India. So this entire ecosystem needs support.
Well, moving on from the shipping industry to the airlines industry, the centre has warned airlines and airline travel aggregators against dark patterns to lure customers. In an important meeting chaired by the Consumer Affairs Minister Prahlad Joshi, the government has directed airlines to stop practices like pushing for higher airfares and false urgency to book air tickets or tour packages. My colleague Sameer Dikshit is joining in with the details.
It seems that the government, specifically the Consumer Affairs Ministry, is quite unhappy with the airlines. The tactics that they are using to lure the customers, to attract the customers to book the air ticket, and not just the airlines, even the online travel aggregators, they are under the lens. So basically, government or the Consumer Affairs Ministry, they chaired an important meeting with the stakeholders on the issue of dark patterns. The airline representatives were also part of this meeting, and the government gave a clear message to the airline representatives that the tactics or the dark patterns that they are following to lure the customers, to attract the customers. It is unethical. The practices falls under the unfair trade practices and it should be stopped. So basically government has highlighted a couple of issues. For example, the customers are given sort of a false urgency that they need to book the ticket or else the airfare may go up even higher and higher. That sort of false urgency, even misleading advertisement or distrust kind of advertisement is being shown on the website, even on the online travel aggregators platform as well. In addition to this, the seats which are paid seats in the aircraft that are actually being pushed by the airlines, the algorithm that they are using, they are firstly pushing the paid seats to be sold first. So these sort of tactics falls under the category of dark patterns and it needs to be checked. So the government has given a clear message that first the airlines, the travel aggregators, they have to fully abide by the guidelines that has been issued by the Consumer Affairs Ministry on the subject matter of dark patterns. Secondly, now the airlines and the aggregators, they have to do an internal audit to check these dark patterns. They have to stop it and they have to submit the audit report to the government, to the ministry as well. And government will keep a close eye on these sort of practices which are being followed on their portal, and if found guilty in coming days, then there might be some strict action that will be taken up by the government or the Consumer Affairs Ministry.
Okay, Samir, thanks so much for bringing us all of those details. But with that, we're completely timed out on this edition of Your Trades. Ankita and I will take your leave, but stay tuned to ET now for more news and updates.